Yes, good morning and welcome to today's call. So far we have moved some steps from the beginning. Now we are at least somewhere. We have looked at things like how to set a trade, how to set a strategy depending on your capital, how to enter the market using the MACD, the RSI, and how to compound our small capital so that we can get to reach our goal of at least $10,000 worth of trading capital. We have learned so many things like drawing the support and the resistance, how to customize our trading view. All our classes are there on our YouTube channel, this one, the Crypto Independent Community. And today, because previously we have learned about the confluence or the confirmation, where we saw the breakout candle and the confirmation. So now today I want to continue from there. Still, we have a lot to know while entering the market. Like I always tell you, the market is not your friend, the market is not your sister nor your brother. So in any way it will not favor you. You have to try your best, because as you try your best to win the market also tries its best to go against you. So while picking trades, at least be sure like 75% your trade will deliver. And how are you going to be that much sure? So today we are going to be discussing about that. Okay, let me go straight to the trading view and we start from there. Like yesterday we saw the breakout candle plus the confirmation, and still we are continuing from there. We want to make sure that at least we are sure of winning the trade by 75% and above. 75% and above. So today's lesson, we are going to be combining all the knowledge now we already have, like drawing the support, the resistance, and so much more. So allow me to first remove all these drawings, and we start by drawing them, how to get a confluence and how to be at least 75% sure that our trade will deliver. Basing on the indicators we already know, like one, we are going to use this one, the stochastic RSI, and maybe we use the moving averages, convergence, divergence indicator, the MACD. Okay, so let me put them all in our chart. So like I told you, while drawing the support and the resistance, first spot where the current price is, because minus spotting the current price, you will never know which line are you going to draw. Are you going to draw the support or the resistance? Because those of you that do remember integers back in primary, that anything above the line is positive and anything below the line is a negative. So those integers apply some knowledge. Okay, so you have to begin by spotting the current price, where I told you that this thin dotted line, this one here, it represents the current price. Now that you know the current price, you have to begin by either drawing your resistance, which will be above your line, or your support, which will be below your line. Okay, I hope that is clear. And I told you that if you don't know how to draw the accurate lines, change from candles then to the line, because with the line it is a lot easier. Where you see a normal V like this one here, you draw there a line. Where you see the inverted V like this one here, you draw there a line. As simple as that. Where you see an inverted line, you draw there a line. A normal V, you draw there a line. I hope now I'm trying to simplify things, because me, I'm a kind of person that does not want to complicate anything. Okay, I don't want to complicate anything. So let's take only those lines for today's lesson. So now we can change back to candles. And time frame is also a key. Time frame is key. A bigger time frame gives you a wider picture of the market, and a shorter time frame gives you a small picture of the market. Like for instance, we are in a 4-hour time frame, meaning that each candle here takes 4 hours to complete. 4 hours to complete. Like if we are to count these candles, like that would be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. Like here in our chart we have 24 candles, but each candle takes 4 hours to complete, meaning this is a wider picture of close to 2 days, 3 days and above. And vis-a-vis, when we try to use the 1 hour time frame, each candle will take 1 hour to complete. Each candle will take 1 hour to complete. Like when you try to count all these candles, you end up like getting 1 to 2 days. But remember, in a bigger time frame, we were 3 to 4 days. Now we are 1 to 2 days. So the bigger time frame, the bigger the picture in the market. But I'm telling you, 1 hour is also good for making your analysis. 1 hour, 4 hours is a good time frame. So today we are going to focus on using or making our analysis in 1 hour time frame and 4 hours. Now we are beginning with 1 hour, as you see here. 1 hour, okay? And we do have our indicators in the chart. Okay? So When we take this part as an example, this part here, of course, our stochastic RSI recorded that movement still. Even the MACD recorded that movement. Like here, this was a downward trend, like you see here. Our stochastic RSI showed you that it is on a downward trend. And the MACD also made what we call a death cross. So all these two indicators, the MACD and the stochastic RSI, gave you one picture that the market is on a downward trend. Likewise, when the MACD formed a golden cross, our RSI also formed a cross. And this cross here, when the blue line crosses above the brown line, that is also a golden cross. When the blue line crosses above the orange line. Now, the blue line is what we call the signal line, and the brown line is what we call the average line. Okay, I'm trying to put it into simple words so that any one of you can understand it better. This blue line here, it is the signal line. It moves according to the market in a real time, because RSI is a real-time indicator. Likewise, the MACD is a lagging indicator. I hope you can understand what lagging is. It's not a real-time indicator. It gives the market, or it predicts the market within a longer period of time. Like, in most cases, it will never provide a false signal. That's the only difference between the real-time indicator and a lagging indicator. In most cases, a lagging indicator will never provide false signals. Vis-a-vis the real-time indicator, because since markets change at any day, at any time, the real-time indicator might provide some false signals. So you don't have to depend on one indicator, and that's why I put that focus today on combining these indicators with the knowledge we have about the confirmation and breakout candles, so that it gives us a clear picture of what the market is doing and what is the market is likely to do in the coming future. So indicators were explained. Now look here, friends. Do you see this? Do you see that part? This bullish candle, the green line. If we focus on this line here, okay, this will be what we call a breakout candle, because it opened below our line and it closed above our line. So it qualifies to be a breakout candle. And I told you that the next candle after the breakout candle should act as a confirmation. For you to know in which direction is the market likely to go. Okay? So, focusing on the breakout candle only, When this breakout candle happened, this is a confluence. It opened and it closed above our line here, meaning we can enter the trade from this point here and take profits to this point here. After we enter again, we take profits at this point here. But remember, I drew these lines in a 4-hour time frame. In a 4-hour time frame. So let me first remove them, then draw them again in the 1-hour time frame, because I don't want to cause confusion. Now many of you are saying, why are these lines not corresponding perfectly? So we change to line, then where you see a normal V, you draw there a line. Where you see a normal V, you draw there a line. Where you see the inverted V, you draw there a line. Okay. So let's take those lines to be our examples. Now we go back to the candles. Okay, is that clear? Let's first take this picture here. I hope you all see here, guys. This candle here, which is a hammer. I know you may not understand what a hammer is, but when we come to the lessons about candlesticks and chart patterns, you will know it more. But this candle here, it was a breakout candle. It opened below the line and closed above the line. But the next candle, which is supposed to be our confirmation, did not open and close above the candle, meaning the market will take the opposite direction. Like, we learned that when the confirmation candle, it opens and closes above, it is an upward trend, or the market is going to take an upward direction. Versus V, when that fails to happen, then it means the market is going to go down, like you see. After this candle failed to make a confirmation by starting above the line and closing above the line, it did the opposite, then the market went the opposite direction. Is that clear? Is that clear? So let's look at another example. I told you that the reason as to why we are teaching you these skills and not teaching you only one indicator is because you don't have to depend on one indicator. You simply have to use more than one indicator plus the knowledge from the chart if you want to be a technical analyst. You don't have to depend on one indicator, because indicators also don't control the market. They are just giving you a picture predicting the future according to the history, but they do not control the market. So don't be surprised if at all you enter focusing on one indicator and the market goes against you. It will happen many times. So try to combine more than one indicator to give you a confirmation. At least be sure 75% that your trade will go in your favor and not against you. So with this here, you can see this is a breakout candle and a confirmation. Boom, the market went up. Focusing on this trend here, let's put in the indicators and we see. This trend here was recorded here. Do you all see, guys, that the signal line crossed the average line? It made a golden cross and the market went up. Likewise, the MACD also made what we call a golden cross and the market went bullish. So do you see how you can pick this trade comfortably in case you found it at this point here? When the market has just formed a breakout candle plus the confirmation, you try to look at your indicator. RSI is showing a golden cross. You come back here on MACD, it is also making a golden cross, meaning you have at least 80% of this market going in your favor than going against you. This is what I wanted you people to understand. Combining the knowledge you have about different indicators, are they speaking the same language? And if they do speak the same language, whether they are showing that the market is going down, then leave the trade, go pick another one. And if they do speak the same language that the market is going in the positive direction, then take the trade comfortably. Take the trade comfortably. Don't wait for anyone to send you a signal. Remember, our goal as the crypto independent community is to help you become crypto independent. We don't want you to focus and depend on someone's signal. We want you to create your own signals at your right time. Like, we are doing this business differently. Many of you are doing it part-time, others are doing it full-time. So in case you are doing it part-time, we don't know what time you will be free to pick up trades. Okay. I hope I'm trying to create understanding. Okay. So, let's talk about a little bit of the take profit according to the different time frames. Like I told you earlier in our first classes, that when you pick a trade, focus more on the time hour frame. The time frame is key while predicting your take profit. Like I told you, in 15 minutes, take from 1.1, not exceeding 1.5. In 1 hour, take from 1.1, not exceeding 2.5. And in 4 hours, take from 1.1, not exceeding 5%. but I do recommend small profits. Then I would say not exceeding 3 or 3.5. I hope I'm trying to create some understanding, because the higher the take profit, the longer you are likely to stay in the market. And in our previous classes, I showed you an example of different traders, one who takes higher profits and one who takes small profits repeatedly. And we saw it clearly that a person who takes small profits repeatedly can end up earning a lot more than the person who decides to take huge profits at once. So, if we are to measure, like we are in a, I think we are in a 1 hour time frame, right? We are in a 1 hour time frame, meaning our take profit must be 1.1, not exceeding 2.5. So let's assume with 1 hour time frame you are taking your profits to be 2% or 2.3. We want to calculate, did this trend here rise at least by 2.3%? So we bring our price range, measure from our point of confluence, like from that point here, because this confirmation candle here, this red candle, it closed at that point here, meaning we can take entries at the close of that confirmation candle. So we measure from that point up to there, you see. From this point here up to this point here. And do you see the take profit? It is 8%. It is 8%, increasing your chances of winning almost up to 99%. But what made the 99% is through trading with the confirmation, using all the indicators you know, plus the confirmation. I hope I'm trying to create some sense, right? I hope I'm trying to create some sense. Now, I talked about taking small profits repeatedly. Let's say one decided to take 2%. How many trades would he have won on this trend here? So from here, we measure the 2%. So this is a 3%. He enters again on this bearish candle here, takes another 2%, okay? And with this 2% here, I hope you all see it, guys. The candle which made the 2%, this one here, is a breakout candle. Is a breakout candle. And with this breakout candle, when you look here on our MACD, you see how the color is increasing. Remember when we are talking about the color changes on the MACD indicator. You see how the color is increasing? It is still showing you that the market is still going up. So with this confirmation that the market is still going up, plus this breakout candle, you can decide to enter the trade again. So you come, you enter this trade at the opening of this candle here. Then you take your 2%. You see, it delivered another 2%. So this person here made a 2% at first, plus another 2%, plus another 2%. And if you are a little bit greedy and your focus is to set 2.5%, still you would have made it. You take your 2.5 plus 2.5 plus 2.5. Okay? So this person here ended up with a 6%, and this person here ended up with a 7.5%. Am I trying to create some understanding? Am I trying to create some understanding? Do you see how money is made in cryptocurrency trading? You don't have to diversify more of your capital that you trade a lot of coins. Still you can make it trading one coin per time. One coin per time. You simply have to have some kind of knowledge on how you can pick these trades. And this is what we are trying to teach you. This is what we are trying to teach you. And when I told you whatever goes up comes down, and whatever comes down goes up again. So this was a breakout candle. This one here. I hope you all see it. And next to it is what we call a confirmation. But when you look at the indicators here, you come on the stochastic RSI, it made what we call a death cross, right? The signal line crossed the average line. When you come on the MACD, you see how color has changed from dark green to this pale green here. I hope you all see it. Let me draw there a vertical line so that we can see it clearly. On this confirmation candle here, this confirmation candle, you see, the real-time indicator has already showed you that the market is going down because it has already made a death cross here. And the same candle here, when we come on MACD, it is showing you from that point here, the market is coming down. And of course, it didn't go up because all the indicators are showing that the market is going down. Now, stop focusing on the confluence only or on the breakout candle only. That's why I decided to make this lesson today, because previously we learned about the confirmation candles, but I don't want you to chase the market simply because you see a confirmation candle. Add in some indicators to give you a clear picture. I hope I'm trying to create some sense, guys, right? I don't want to complicate anything. I'm trying to put it in simple terms as much as I can. Because trading is easy. It is easy and a lot of fun. Like guys, who can't read this indicator? Like seriously, who cannot read this indicator here that is showing a downward movement? And who learned about MACD that cannot predict this downtrend here according to the color changes? You all know it. So why are you complicating trading? Don't complicate anything. Trading is as easy as any other business. So guys, for today, allow me to stop here. We shall continue from there tomorrow, if God wishes. And I would like to wish you a happy business, happy trading. And if this video has been helpful for you, share it with your friends. Give me a like if you don't mind. And if you have questions, please feel free to drop them in the comment section. And don't forget to follow our TikTok page, The Crypto Independent, because we are trying to help our community as much as we can so that trading becomes as easy as anything to everyone in the community. Otherwise, from me to you is a nice time. Have a blessed day.